Hello traders, Gary Wagner here just before 2 o'clock in Honolulu, 8 o'clock in New York. It is Friday. Happy Aloha Friday, as we say on the islands. It is the 28th day of August, 2020, and this is the Daily Report for gold and silver, our weekend review. And what a week we have seen. We have seen one of the more extreme, volatile weeks that we have seen in quite some time, with Chairman Powell delivering a keynote speech to the economic summit, which was held virtually due to the pandemic rather than Jackson Hole. Nonetheless, there was a knee-jerk reaction. We saw the market move up tremendously as he started to speak and then go down substantially, still closing down about $16 on the day. We, of course, entered a trade. Our trade in gold is at 1956.5. And yesterday, it was certainly behind current pricing. The same cannot be said for today. We had the market move up substantially. 1972 is the current fix. And on today's show, I will begin to look at some targets. We'll also take a look at some short-term studies to show you that extreme volatility on what I am coining the Powell Paradox. Let's take a look at the price board. Markets are extremely sensitive and extremely fickle, considering that it was our assumption that following the announcement by the Federal Reserve during Chairman Powell's keynote speech yesterday, it would have an extremely bullish effect on gold and silver pricing, taking them higher off of the gains that were seen just the day before, which we can clearly see when we look at a daily candlestick chart. Of course, this candle here represents trading on Wednesday, when prices surged and gained approximately $40 on the day. That was followed by yesterday's activity, in which Powell did speak, and what we saw was the market rising to a tremendous level above 1980 and also hitting a floor at about 1419 and then still settling lower by about $16 on the day. But that all changed today because we had a nice upside move in the market, a positive gain of over $40, more than making up for any lost ground in terms of yesterday's trading. Although silver reacted differently in terms of its timeline when compared to gold, what we can see is that on the day prior to his keynote speech, the market actually went lower on the day. This is the day of the speech itself and today's recovery. Silver is currently at 27.60.5 cents, up 58 cents on the day. Now, we had strong tailwinds also from a weaker U.S. dollar, and that was the other thing that we were looking for. Dollar lost about 0.8%, currently fixed at 92.27. Interestingly enough, the cryptocurrency Bitcoin experienced the same kind of drawdown yesterday when Powell spoke, but we did see a pretty decent recovery today, with Bitcoin at $11,605, up $255 on the day. For more information on Bitcoin, click the Bitcoin tab at the top of your screen, and you're able to read the full analysis of recent activity. We are looking at a 60-minute, 1-hour candlestick chart in which we have notated the day before Powell had his keynote address, when he had it, and then after. And we can see the kind of dramatic effect, what I'm labeling as the Powell Paradox, because before Powell actually went to speak, we saw a nice, healthy rise in gold, taking it up about $40. Market meandered lower through the evening, but you can see that Powell began to speak right here during this particular candle. That is when it ran to the highs of approximately 88. And on the following hour, it actually ran to the lows that came in at 1914 and then closed under pressure, down $16 at 1925. Of course, we did enter a long trade in gold, December gold, in which we bought at 1956.5. Currently, we are tracking gold at 1972.60 after factoring in today's nice $40 gain, and we will look to trail or move those stops up higher next week. But my recommendation for right now is to maintain your current long position and to maintain your stop. And traders, one of the reasons that I've recently become so bullish and issued the trade alert prior to this final C wave either matching the A wave or going below that is the compression of range that we talked about over the last couple of days. We have seen a series of lower highs, a series of higher lows. When I looked at this formation, rather than it being a simple ABC, it seems to be a variation off a pennant formation. My sense was, and when I initially drew the chart and put the C in, the market was trading roughly at about 1925. You can see we closed just at resistance at 1972. And traders, if you recall, when we sent out a trade alert for going long Forex and December gold, we issued simultaneously a recommendation to go long December gold. We got in at 27.39. Market is currently at 27.60. So we've got a small amount of profits under our belt. In terms of our strategy and upside target, it's much more clear in silver. We have real resistance at $28 and major resistance at $30. Again, maintain all of your long futures positions, maintain GLD and SLV. This has been Gary Wagner, wishing you as always good trading. We will talk to you on Monday for the next daily update and review. Bye-bye.